Well, the team at Codros Research released a report which they tagged Outlook for 2021 and Positioning in the New Normal, particularly for the financial market, and they presented their views on different sectors. So let's talk to the acting managing director at Codros Asset Management, Bolaho Aino. Good morning, Bolaho. Thank you very much for joining us on the program.
Good morning, Chimeze. Thanks for having me.
Yeah, now this year really has been truly exceptional, one in and out financial markets. How would you describe the financial market in 2020?
Great. So this year has been several things. It's been a COVID-19 pandemic narrative, and that's largely shaped the way markets behave, that shaped the way consumers behave, that shaped the way governments behave this year. Interestingly for Nigeria slumped into its deepest GDP contraction in Q2, and followed by that, we went into a recession in Q3. This is the second recession we've seen in about 4 years. So apart from the recession, it's been a stagflation, and stagflation is when you have high unemployment, you have high inflation rates, and you have a recession. So it's really been a difficult year, more or less, on all fronts. But the market has also behaved very well this year. The equity market that was sleeping rose up, and the equity market has done fantastically well this year. Also, in terms of the bond market as well, while yields have been low as well, in terms of bond prices have gained about 50% this year. So it's been a mixed bag. So there's the good, there's the bad, and the ugly. The good is that the financial markets really have been upbeat. When you look at the bond prices, when you look at equity prices, some stocks have gained as much as 50 to 100% this year, despite starting the year on a very slow pace. In terms of the bad situation is a low interest rate environment. And we saw interest rates really go down to almost lowest we've seen in historically. T-bills rates almost there in 0%, which really means a negative return for a lot of investors. But I think the ugly thing is when you look at the health side of things, people that have lost lives, that have lost job. But so it's been bittersweet. It's been a mixed bag. But financial markets are smiling. Like I did said, the equity market has been up. A lot of the indices have done pretty well. The Nigerian market was the third best performing market globally on a dollar adjusted basis as at November, and was the second best in terms of just looking at it on face value. So really, it's been mixed bag to characterize what has happened, what has shaped events this year. But to put it in simple words, it's been a COVID-19 narrative.
Now, your latest report is tagged Positioning in the New Normal. How important is this?
So I guess people need to come to terms that things have changed, and so you need to position. You need to be able to position your investment. You need to be able to take advantage of opportunities. Like I just said, while there have been some ugly scenarios this year, there have also been some good times as well. There have been good times in terms of return, and a lot of people were able to take advantage of those returns because they're positioned perfectly. And while everybody's hoping for 2021, the thing is that some of the things we have in 2020 might still linger for a bit. Yes, we expect to come out of a recession in 2021, but that impact might take a while. We expect interest rates to go up sometime in 2021. It might not be immediate. So in terms of how people invest, in terms of how people structure their portfolio, then to be able to factor all this in place. Do I need to maintain a short duration of my portfolio because I think interest rates are going to go back sometime up next year? What do I think is going to happen to the equity market? So all this needs to be put in perspective. And like I just said, some of the issues that we still have from 2020 might still linger a bit. In terms of on the macroeconomic front, for instance, so they need to think about they are going to be able to grow the economy. So there's a challenge. So the economy is going to come out of a recession, but are they going to be able to grow it substantially above population growth? So it's all on all fronts. But everyone just needs to position, and it's very, very important to position to be able to take advantage of what we expect in 2021.
Now, you presented your views on, the various sectors. Let's start with the banks. You are overweight on the banks. So what are your expectations for that sector?
So the banks have done well, very well more so, considering that this year we have low interest margin for the banks. If you look at the NSE banking index, for instance, it's gained about 11.9% year to date. And really that might seem good, but that doesn't really tell the whole story because a lot of other sectors have done very well as well. The huge liquidity we've seen in the economy has spurred a lot of performance for a lot of the sector, not just the banking sector. But the banks are proven to be resilient. So for a lot of the banks as well, we think that they are going to be able to pay strong dividends, and that means that investors are going to earn strong dividend on their investments. That is quite attractive, bearing in mind that the interest rate is still pretty much low. And I did mention that a lot of the banks have strong balance sheet size as well. So in terms of being resilient, in terms of being creative, in terms of being innovative, we've seen that happen a lot with the banks as well. So we are quite overweight. We love the banks, and we think that the banks are going to do a challenging year in 2021, but I think a lot of them are still going to do well. And it's good to mention that we still think that some of the macroeconomic headwinds are still going to persist next year. So while people are positioning the bank, that's one needs to be careful and to take position cautiously. Like I just said, we still expect interest margin to be a bit pressured next year as well. There might be a bit of asset quality issues as well next year as well. So just to be a bit careful, but we are overweight with the bank.
So what are your top picks in that sector and why?
Okay, so two things is a twin benefits or objective for us. So for a lot of the banks, so we think there's a strong dividend yield expectation, a strong dividend play. And a lot of them, like I said, double-digit numbers. And that's really attractive when you compare to where we have in terms of the fixed income yield environments. And the banking sector, they've also proven to be resilient in recent times. And we think that's going to support their performance in 2021. But in terms of our topics, we are Access Bank. And our target price for Access Bank is 13 naira 80 kobo. We also have FBNH as well, and we have a target price of 8.50 kobo. We have Guarantee as well, 41 naira. We have UBA, target price of 11 naira 24 kobo, and Zenith Bank as well is on the list at 2.28 naira. Interestingly, Zenith Bank, if you remember, came to as low as 12 naira sometime this year. It's gained almost 100% from the low that we saw this year as well. So it's been a good story for a lot of the banking sector stocks this year.
So for the consumer goods, it's a mixed bag for you. Why?
Well, so it's two things. So if you look at the way the consumer goods have really performed in 2020, some have really performed very well, but the consumer goods sector has really underperformed the general market, and it's majorly because of demand pressures. So a lot of people lost jobs this year. So there's that pressure in consumer wallets. Also for some stocks as well, for the agro-allied sector, they've done pretty well, and they've been able to, one, increase prices. But for some of the sectors in the consumer goods sector, the brewers, for instance, while they've not done so well as some of the other sector. So what do we think is going to be a mixed bag for the consumer goods sector? So we think that the agricultural sector is going to benefit from improved volumes from new maturities. However, there's a challenge. The president mentioned that the border was going to be open, and that is going to pose significant risk as we expect supply to increase in that sector as well. For the brewers as well, we expect them to increase better, to record better volumes in 2021 because of the low base effect. But they're going to be posed with the challenge of increasing prices, because for them, there's that challenge of increasing prices in an high inflation environment. So we think that's a major challenge for them because of the inflation and the FX illiquidity that they're going to face. So that's why it's a mixed bag. So for some, we think that there are a lot of upside potential, but for some, it's neither here or there. And because of, one, the FX liquidity pressure, and also because they are not able to raise prices significantly above inflation rate.
Okay, now let's look at the cement sector. What is your outlook for that sector? You talked about the border reopening, and don't forget the Africa Continental Free Trade Agreement deal is coming up January 1. So what will that mean for not just the cement sector? Yeah, we just finished talking about the consumer goods sector.
Yes. So it's two things. So for the consumers, so I think it's maybe good news because they're going to have options. There's going to be more supply, and usually when there's competition, it means that prices will come down. But for the players or the people in that sector, that means that there's going to be competition on their price as well. So they might be forced to bring down prices. And the other major issue is that because there's a non-existence of anti-smuggling deal with neighboring West African governments, so that's going to put a lot of pressure on their prices in 2021. So might see reduced volume or might see pressure in terms of their revenues for the players, but for the consumers, where some of us fall, that means we might see lower prices, and so that might be a bit of good news. But for the players, might be a bit challenging for them because of the border reopening.
All right, let's look at the telecom sector. Well, looking at your report, you noted that there is a potential negative impact on the first quarter 2021 revenues and earnings if the NCC does not extend the NIN registration deadline and lines are disconnected. But do you see a light at the end of the tunnel, at the end of this whole exercise for that sector?
Yes, so we like the telco sector, and they've done very well. They've proven to be resilient during the pandemic. With the lockdown restriction, a lot of people were forced to either be restricted, working from home. While we saw that a lot of sectors suffered, we saw aviation sector suffer, we saw real estate suffer. A lot of people had to do their transaction either through their phone call, electronically, and that was good for the sector. A lot of people that were never on Zoom before, a lot of parents, grandparents, began to use Zoom, began to use some of all these platforms. And our players, MTN and Airtel, also benefited from that as well. So for MTN, they enjoyed strong subscriber base during that period. They also enjoyed increased smartphone and data penetration as well, and also high 4G population coverage within Nigeria. So it's been good for them in 2020, and also we expect that to still happen going forward. Despite the fact that there was FS liquidity issues, really the sector was more or less insulated. And the good thing that we saw for the telecom stocks was that for Airtel Nigeria, for instance, which is dual listed, so we saw a lot of investors exited the market through Airtel Nigeria. So it's a fungible stocks, so you can buy in Nigeria and able to exit in London Stock Exchange. So that drove the price of Airtel Nigeria. So year to date, MTN has done about 52%, while Airtel Nigeria has done 159% return, which is quite remarkable. But we think that the new regulation by the NCC might probably affect them a bit, at least in the first quarter, because what it means that if lines are going to be disconnected, that means there's going to be an impact on revenue. Revenue streams are going to be stifled. Revenue streams are going to come down a bit. But MTN has also been able to put some measures in place as well to be able to ensure that this is being mitigated. Not just MTN, a lot of the telcos are trying to put measures in place that this is being mitigated. But is there like at the end of the tunnel? So yes, I think so. For MTN Nigeria as well, they are going to be big on the PSB, which is the PSB banking license. So once they have that as well, that's going to impact on their revenue as well. So I think there's light at the end of the tunnel for not just MTN or Airtel, for a lot of the telco players.
All right, Bolao, a quick one before I let you go. Going into 2021, how can investors reposition for return on investment in the new normal?
Great. I think for investors, you need to be able to understand and learn your risk properly. Are you long-term or short-term? And if you're long-term investors, you can invest in the equity market. What we saw was that we think 2021 is going to be a tale of two halves for equity and for the fixed income market. For the equities market, we think that in the initial first half of the year, market is going to rally on the back of illiquidity in the system. But as we go into the other half of the year, when yields and fixed income instrument also begin to change, might begin to see profit taking and might begin to see people reallocate their investment from equities to fixed income. So if you're a long-term investor, you can invest in the equity market in fundamentally justifiable stocks. If you're a short-term investor, I advise you to take short duration in money market instruments. Short duration is because we expect yields to rise sometime in the year. So you don't want to go too long into the year, and when yields rise, you're not able to enjoy the high interest rate environment. Also, if you're an equity investor as well, look for stocks that pay attractive dividend. We expect a lot of companies to pay dividend in double digit this year as well. And if you have investments or obligations in dollar as well, look for dollar instruments, dollar mutual funds, euro bonds as well. Those provide you two benefits of currency hedge and inflation hedging benefit as well. So one, understand your risk, and based on your risk, begin to allocate your resources in that regard.
Molaho, it's always a pleasure talking to you, and thank you for always being on our show. Well, I'll use this opportunity to wish you and your family a Merry Christmas. Be well and be safe.
Thank you, Chimese. Merry Christmas to you as well.
Thank you.